everybody. This is Bob Ichino from Path Trading Partners along with Mike Arnold here for your weekly FX Path Chat update for the week that's coming. Quite a bit of information coming out, or economic data rather, starting with, honestly, this afternoon. We're recording this on Sunday. And this afternoon, there's some decent economic data coming out. You've got Australian retail sales coming out. You've got the Caixin Index, the composite and the services from China. Caixin Index is the small business index in China. Then starting on Monday, it slows a little bit. You've got Eurozone investor confidence. Draghi is speaking to Parliament in Brussels on Monday as well. And then you've got some U.S. Fed speak. U.S. Fed Harker speaking about payment systems. He's probably not going to mention anything about the economy when he's speaking on payment systems, not anything of any note anyway. And then you've got the Australian Reserve Bank, the Reserve Bank of Australia rate decision on Monday as well. Tuesday, it starts to really pick up with Canadian building permits. We've got the Bank of Japan Summary of Opinions, which is a meeting where they talk about the economy, and they put out some pretty provocative statements in the past. We'll see if that continues. Wednesday, Bank of England Deputy Governor John Cunliffe speaks in Birmingham. We've got the Reserve Bank of New Zealand rate decision and policy decision as well. And then we've got business confidence in Australia. That's all on Wednesday. Thursday, initial jobless claims in the U.S. Fed Bullard speaking. Got Fed Evans speaking again, which I don't expect him to say anything in that particular speech. His dovish opinion is pretty much known. And we've got the Japanese tertiary index. And then on Friday, we've got in China, new loans data will be coming out. We've got Canadian unemployment, so matches U.S. unemployment just a week later, same data. We've got the University of Michigan consumer sentiment in the U.S., and then we've got the usual things like Baker Hughes rig counts and the like. So a decent week of data, and then obviously the political arena is continuing to dominate the headlines. Over the weekend, there's been some back and forth on a Washington judge's decision to strike down the 7-country immigration ban or stall or whatever you want to call it. We don't get political here. So I'm going to go ahead and turn it over to Mike to let you know what he's seeing technically, because, again, price action is the only way that we trade this stuff, because you can't make heads or tails of the data and all the unannounced crazy stuff that could come out in the U.S. political sphere. So, Mike, it's all yours.
Okay, thanks, Bob. So, everyone, hope you're having a great weekend. We're recording this before the open on Sunday, so we don't have any Sunday data yet. This is the close on Friday. Euro US dollar daily chart. We talked about a close above this trend line, going into this clear path move with an upper target of, first of all, we have a significant level that's also a target level, which is highlighted in magenta. Then we have this blue box, which encompasses this upper channel line and the declining 200 period simple moving average. We triggered it, went back down to the rotation zone and our static rotation zone, dynamic rotation zone. Now we're rotating back up. We're still targeting these levels on the daily. What's interesting on the weekly, if you look at that little box there, it comes in right at the 50-week exponential moving average. So that's going to be a very powerful level, and it looks like we closed above the weekly rotation zone, which is now flattened out. So that loses some significance when it does go flat. So keep watching for more potential upside in the euro. Pound, US dollar. Here we have the weekly. Let me switch to daily. It's easier to see things on the daily. We went up. We've tested these key levels, which we've talked about. We had a trend line trade, ran up to these key levels, tested again, and now it's gone back down. What's interesting on this is we have a potential double top forming. So let's measure this out. Here is the potential double top. It's interesting as the full target comes right around this lower significant level. Minimum target about the 122.16, 122.20 area. Because this flat area, I'd make this a 2-level trade. The stop reduction zone is right before we get to this flat area, which is going to be key. We're not going to trigger until we get below this low, which is 124.12. We need a close below that. We've still caught on the rotation zone on a daily, and that will also put us below the 50-period exponential. So there's lots of key support in here, as well as this line also has major significance, this red line. I'm actually going to change it into a significant level at this point. We can see all the key reactions around this level. And if you want to learn about significant levels, come to our Path Trading Partners website, and we have a whole course on it. So this is going to be very key to watch for to trigger. That's what I will be keeping an eye out. I don't have anything to the upside unless we rotate back up and get above some of these key levels. So that's the only thing I'm going to be watching in the pound. US dollar, Japanese yen on the daily. We've had redraws of trend lines, which we did offline. If we get a close below this low on a daily basis, the low of 112.05, it's really going to be watching for a close around the 112. These are more scalp trades because these are for anybody looking shorter term, because our next major level is 111.64. If we get below that, next level is 110.63. If we get below that, then we have some really nice area to trade into. There's a huge vacuum down here. On the upside, we have the rotation zone. You can see we rotated up in that zone and fell down. We have a lot to get through if we go upside. So if we do rally, watch for resistance near these prior key highs and closes. You can see them all in here, which also lines up with the 50-day exponential, and we have the declining upper end of the rotation zone. So there's going to be a lot of resistance. We also have this declining trend line, which can provide resistance. So if we do rally, get above Friday's close, Thursday's open, watch for us to possibly get to around the 113.80 level, maybe to the 114.20 level. And then this trend line will update. If we actually rally and get through this, we'll update any potential long trades. They're more scalpy to the long side right now, and even scalpy to the short side. But we get below this key 112 level, we could accelerate pretty quickly. US dollar, Swissy. You can see the power of this rotation zone, also this trend line. So we rallied up, tested the trend line. This trend line is pretty significant. We've got initiating point. These defining points line up exactly. This would be the defining point, the lower one, but it's been tested 3-4 times, 2 times almost to the pip, and this one just missed it. This is a very significant trend line coming in with the declining rotation zone. If we were to get above these key levels, really the dollar mark, parity level, that's the only way I'm going to see some more upside potential. If we do rally, there's lots of stopping points in here. If we do decline lower, we still have the 200-day moving average, these dueling significant levels, and this trend line, which has been tested 3 times and held. If we do get below this trend line, we're really watching for a close below the 98.70 level. Then you could see a pretty quick decline down to the 97.48, really 97.50 to the 97.40 area. This zone right down here. That's what I will be watching for if we go lower. And finally, we'll put in some Aussie. We've been watching the Aussie. This is on a weekly basis. We have a great horizontal channel defined by significant levels. This is going to be very interesting to trade because technically we need a close above the 76.79 level on a weekly basis. We've closed right at it, so it does not trigger. It's really going to have to be traded if you're looking at this sort of as daily or intraday scalps. If we do continue to run up, our first major target is the 78. We have 77.85 with another significant level, and the first GAN target is a 78.05. So you're looking really 77.90 to 78 key level in there that you could see some intraday rallies to. If you get above there, the next key levels that you're going to be wanting to watch for are the red line that's already defined and the 80.57 level, which also looks like it has a fair amount of significance. I'm going to mark this one off in magenta because it's a target and it has significance. And then we have the upper target line here. So those are longer terms. The upper target line is also going to come in with the declining 200-week moving average. Just check on a daily real quick. See if there's anything else. Look at that key close on that significant level. Nothing's in the way in terms of moving averages. We have the rising rotation zone. If we do pull back intraday, watch for support around these prior breakout zones and the rising 8. And then if it dips back down to the rising 21. So you have tons of support in here if we do turn lower and rotate back up for another run at these key levels. That's all I have, Bob. I'm turning it back over to you.
Thanks, Michael. There's a fresh Money Path podcast at pathtradingpartners.com or on iTunes. And visit us at pathtradingpartners.com. Shoot us an email if you want us to cover something specific. Thanks, everybody. Cheers, guys.